Hello Mavericks, Imri here and welcome to today's currency recap. It is Thursday, September 28th. All right, let's get things underway. We're going to be doing a review of the trading day by taking a look at any meaningful news that happened today and stuff that's coming up tomorrow, of course. We're going to take a look at the broader equity market, some commodities as well. We're going to be breaking down the major indices, going through our proprietary currency baskets, going over any major news to close out the week, as I mentioned earlier. And of course, we're going to be taking a look at some setups in the crypto and Forex market.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Starting off with some market analysis. First, we're going to kick things off with the news of the day. There wasn't too much. GDP came in slightly under expectations and unemployment claims were a little bit better than forecasted. But the main news in terms of what actually happened is that the Treasury yield pulled back slightly, and at the same time stocks rose and the US dollar has fallen. So if we look at the day's performance, crypto is the asset class that stands head and shoulders above all others. Oil was the biggest loser on the day, gold slightly underwater, and equities slightly positive as well. And if we take a look at the currencies, it's really the APAC currencies, well, mostly the commodity currencies in the APAC region, the Aussie dollar and the New Zealand dollar outperforming the rest of the field, with the Aussie dollar being the clear winner. The European currencies all held their heads above water. Meanwhile, the North American currencies were among the biggest losers of the day, and the yen was negative as well. No surprises there, given how today was largely a risk-on day. And that risk-on sentiment is certainly reflected in the cryptocurrency market, as all four major market cap cryptos that we track did very well today, with Ethereum and Bitcoin Cash being the two market leaders. Now, in terms of the market outlook, we're sticking with a -3, folks. We're below both moving averages and the slope has turned negative. Now, you'll notice we're near the bottom support line of this important trend channel in the S&P 500. So what's going to happen over the next couple trading sessions is going to be absolutely key. If we break below the support line, then we could be in for a little bit more downside. However, I do see signs. My personal prediction is that we are going to get one more slight new low, and then we're going to get a more tradable bounce. So we will break below that support channel, and whether that's an extremely significant event or not has yet to be seen. But I'm going to give the bulls a little bit of the benefit of the doubt on this one, provided that once we make that low, we get a very sharp bounce in the next trading session or two. All right, so keep an eye on that, but for now, let's take it one wave at a time. As far as news of the day goes, I've covered the GDP and unemployment claims news already. Those were volatility catalysts on the day for sure. And to close out the week, we're going to get some GDP data out of Canada. And there's going to be some inflationary data coming out of the US tomorrow morning as well at 8:30 a.m. And we're going to see if any revisions to consumer sentiment are significant or not. And then after the markets close, we're going to get some manufacturing data out of China.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
And that could, of course, have an impact on the Australian and New Zealand dollars. In terms of currency analysis on the volatility side of things, the cryptos are all sitting pretty, whereas we see a very sharp contrast between the yen, the US dollar, and the Australian dollar. So we're going to take a look at how those volatility scores might play into tomorrow's trading. I'm a little bit skeptical of this commodity currency strength in New Zealand and Australian dollars, however. So we're going to take a look at that in just a moment as we head over now to TradingView to look at our currency baskets. So first up, I've got the Japanese yen here. My long-term forecast in the yen hasn't really changed. I still think we are going to see some surprising upside. The only question is when. It is not the time to go out and be buying the yen right now, folks, but that day will come. I have lowered the key level, however, in the Japanese yen basket to the swing high from September 21st. Now, you'll notice the sharp difference in the price action. Here on the left-hand side of the chart, notice these big, strong drops in the yen. Contrast that with the price action that's been taking place since the end of July, beginning of August. Very choppy. So this is what I call ratcheting price action. The yen is ratcheting lower, but doing so in a very choppy manner. And we're seeing signs of bullish divergence here in the MACD. So that tells me that we are nearing a reversal in the yen. So I'm personally very wary of being short the yen right now because I think the possibility for a snapback reversal is high. There are better currencies in play, but mark my words, the yen reversal will be a fascinating trade eventually. All right, now as far as the dollar goes, it is possible to count a completed 5-wave Elliott wave advance. So the key levels I'm keeping an eye out for in the dollar, I have key support coming in the basket 123.60 and critical support of 122.50, right? So for the uptrend in the dollar to remain intact, we really don't want to see 123.60 give way. And if 122.50 gives way, then the party is over and we are going to see a very weak US dollar. Seasonally, all right, this is a little hack of mine. Seasonally, you can look at the last 3 months of the year and the first 3 months of the year for significant reversals in the dollar. This isn't a firm rule, but generally speaking, if there's going to be a major trend change in the US dollar, it's going to happen in either the last 3 months of the trading year or the first 3 months of the trading year. And we're right in that window right now. So I'm being very cautious with the dollar. For most of this year, the dollar's gone absolutely nowhere. And we'll see how the year ends, right? But my suspicion is that we're going to see maybe a flat dollar index to close out the year. And next year, we might see significant dollar weakness. But that remains to be seen. Swiss franc, this is a currency that's played out incredibly well, followed the script perfectly. We've now reached my final target, temporary target in the Swiss franc. I've been calling for this target for quite some time now. I'm now neutral. The Swiss franc on the daily time frame is giving us some very oversold readings on the relative strength index. Couple that with the fact we're sitting in support, and I think it's dangerous to do anything with the Swissy. It's best to give this currency some room for now and see if we're going to get a significant bounce or not. Next up is the euro, where we're sitting in minor support right now, and I'm really eyeing this lower support region from the beginning of June. However, if the Swissy is going to bounce, it's possible the euro will also bounce as they are quite closely correlated with one another, right? So perhaps we're going to see some slight euro strength there, followed by euro weakness and Swissy weakness as well. Another currency that's followed the script perfectly is the pound. We've broken through that little support area that I've been eyeing from last week. And I think now, given the oversold conditions in the pound, we can also expect a bounce. I've already overlaid the Fibonacci retracement levels, and I think we're going to trade back into this support zone, what was broken support, which might now serve as strong resistance and coinciding with the 38.2% Fibonacci retracement level. So I think we will see some upside in the pound. However, I also believe that upside could potentially be counter trend. So watch out for that. Canadian dollar, I said look out for a double top. Well, we traded above this key resistance level from the end of June for a few trading sessions, and we're seeing this nice big red ugly candle in today's trading. That tells me watch out. We could certainly see a potential reversal in the loonie as well. And I wouldn't be surprised to see us trade back to where we were around the beginning of September. Also look at this very sharp overbought reading in the RSI, and the RSI is pointing almost vertically down. It's a very ominous sign for the Canadian dollar. All right, I'm still bearish the Aussie. We did break out below this support channel and then traded sharply back into it, but we're now right back into resistance. All right, right here. So I'm eyeing the potential for a double top And we're also trading in between the 61.8 and 78.6% Fibonacci retracement levels. So we're right in the zone where I'd be looking for a sharp reversal here. Whether we get that reversal or not remains to be seen for sure. But given the significant downtrend in the Aussie that we've been tracking really since mid-June, I have to give the bears the benefit of doubt on this one. What would change my mind if we break above the September monthly high from September 20th? All right, then I would say we can cautiously shift our approach to buying the Aussie on pullbacks rather than selling it on rallies. New Zealand dollar. So the key thing with the New Zealand dollar and the Aussie dollar is that they're unlikely to be diverging from one another in a very sharp manner. Similar to the euro and the Swissy, don't expect a very sharp divergence in those two currencies either. And you can see here we have bearish divergence in the New Zealand dollar. So which one's going to lead? If we do get a sharp reversal lower is going to be the question. I have a feeling that the Australian dollar still is lower to go relative to the Kiwi dollar, however. So that's my personal bet. Could definitely be wrong, however, but this is something to keep an eye on. What would change my mind if we get a sharp break higher here out of this blue resistance line? Perhaps come back to test it as support and then trade higher. I'm not in a rush to be buying the Kiwi yet, however. And all right, traders, that concludes our currency basket analysis. You have some potential trades on the table, some exciting stuff. Volatility is actually pretty elevated in the FX markets right now, making currency trading quite attractive. So in conclusion, as always, make sure you're playing relative strength and weakness, follow proper position sizing, and of course, always follow the trading plan. That's it for me for now, traders. See you next week. Bye.